Hello everybody. I wanted to record a short movie to explain the new upgrades and features to our 4Xlounge Live software. I think for many years now our 4Xlounge Live software has gone widely sort of unused, probably because people don't understand it. And now with the addition to the new live trend charts, which you see this little button down here, I think people are finally starting to understand the power of the data that's displayed on this app. All of the data, the main feature or the main tool behind, or I guess concept behind 4Xlounge Live when it was first created, was it was supposed to be a dashboard for our power bars and X-Trend. Basically, you can see for each currency pair, it shows you the current status for each of the different systems. You know, power bars 15-minute, 30-minute, 4-hour, X-Trend 30-minute, 1 hour, and 4 hour. So at a glance, you can see everything that's happening. And whenever a new signal is sent, it will flash, let you know, and a little audio alert will play. If you've been using 4Xlounge Live at all, you know that already. In addition to that, however, above these little icons, there's a lot of information right here that's very powerful. And I guess it made sense. People didn't understand the power of this data until they were able to see it historically. And if you click on this button right here, it takes you to our new I call them trend charts. I didn't know what else to call them, but that's basically what they are. And it shows you the different values, the historical data from the base, the cross, and the technical values. Now, if we go back to 4Xlounge Live, it's these three little dials right here. If you go up to the top here, it shows you base, cross, and text, right? So this is the base. The base is the left side of the currency. The cross is the right side. So for the pound dollar, the base is the pound, and the cross is the USD. And the technical value, this is the global trend value from our technical dashboard. And so if let's go ahead and open up a 15-minute pound dollar, and you can see, so right now if we look at this, we can see that the base value, and you can see it's color coded down here at the bottom. These are the same colors from the market barometer, so it's very easy. Should be fairly intuitive for our members to use this in conjunction with other tools. So the base value right now is -8. If we go back to 4Xlounge Live, you can see it's -7, so it goes back and forth, right? So the cross value should be about -20, and if we go over here and click on the cross and highlight over it, yeah, it's about -20.16. So this data is actually a little more exact even than the 4Xlounge Live. And if we look at these bars in the background, we can actually turn these two lines off and just look at just the technical data. The technical data is showing us -8. And if we go back over here, we can see that the technical data is -8. Now what's nice about these charts is because you can get a nice historical perspective of what's going on. You can see, well, it's -8, but what has it been doing? Well, you can tell these are 15-minute intervals. And so for the last, probably about, looks like almost 20 hours, it's been pushing down. So the pound dollar has formed a short-term trend to the downside. So here's the biggest sort of misunderstanding about this information. First thing is that these are aggregate values, meaning this is the global trend value from the technical dashboard. This is a global or aggregate value of the cross, which is the USD, and this is a global or aggregate value for the base or the pound dollar. So we used the market barometers, X meter, Y meter, and a couple other indicators to generate these numbers. And because they're aggregate values, they're not really pegged to a different time frame or to a specific time frame. And so a lot of people say, well, why do you have all the different time frames then? You know, what's the best time frame to use? The values are exactly the same. There's no difference. These different time frames, if you want to, they're not really time frames, they're time intervals, and they allow you to zoom in and out on the data. So right now, if you look at the 15-minute, it's showing you 100 intervals of 15-minute data. So if you do the breakdown on that, that's 25 hours of data, right? So if I want to see more than that, if I go to the 1 hour and pull up the same currency pair, right? This is basically what that 15-minute chart was showing us, because now we're looking at 100 hours of data. See how that works? It's the same data. The data points are going to be exactly the same, but it's zooming out. And so the difference is when you zoom in, you're going to get more detail on a shorter time frame. When you zoom out, you're going to get less detail, but you're going to see a broader picture of what's going on. And you can zoom all the way out to the 12-hour. And then you really get a sense of what this has been doing. And this is right now, and some of these longer time frames are still crunching on our servers. Right now, I think we have 50 12-hour intervals, and as time goes on, data will continue to crunch. Eventually, we'll have 100 intervals of 12-hour data as well. But so this lets you know on a very macro level, every 2 bars represents a day, right? So this shows you a lot of data and what this currency pair has been doing. And we can see at a glance, we can see that for the last couple of weeks, the pound dollar has been pushing to the downside. It made one small consolidation to the upside and then went right back in. But now this downward trend is starting to fade a little bit. It's starting to lose momentum. And now we can watch this and try to decide if we zoom in. Let's go back to our 15-minute. Now we're going to zoom in on basically just part of this interval right here, right? So we're going to zoom in on that. And if we zoom in on that, we can see, well, it made a pretty big push to the downside, and it's starting to build a little momentum to the downside again. So we may see another push to the downside. So a couple things are ways that you can interpret this data, and it's very important to understand. When the data is between the 60s, 60 and 60, it's a normal, healthy market. It's doing what it's supposed to be doing. Whenever it gets outside of this 60 range, and especially above 70, the markets are overextended. Now remember, this is aggregate, so it's not a time frame. In other words, it's not overextended on the short-term barometer or the 15-minute X meter, or it's just the market period is overextended. So it will consolidate. And so this tells us right here, the USD, in this case the cross of this currency pair, overextended. So that forced this pair into a short-term consolidation. And now it looks like it wants to push down again. This is extremely accurate and valuable data once you sort of get your head around the idea of aggregate and how it works. Most of you that have been with us for more than a couple years have already figured out that I design tools, or new tools come out because it's something that I need, something that I want. When I'm trading, I look at information. I've used 4Xlounge Live as one of my favorite tools for a long time. And just one day it occurred to me that, it'd be really nice to see the historical values of all of these, the base, cross, and technicals, and voila, this was born. And even if all we had was the technical data, this would be very powerful for us to time our entries on long-term trends, to catch reversals. But in addition to the base and cross value, we get even more information, because there's no way that we would have known that this move was overextended looking only at the technical data. But now we can see the USD move down, made an overextended push. I like to wait until it gets into the red or the green, which is why I didn't take this particular trade, if you're wondering. I'm a little more patient, but pretty much anything beyond 60 is overextended. Inside that range, it'll still consolidate, but it'll probably be a shallow consolidation. But you can see, let's look at like the Aussie yen, for example. You can see you have to be careful because it'll make consolidations, but you can see it can keep dipping into that. In other words, when it hits this red, the whole market isn't going to reverse, right? But it is going to consolidate. But it will push down again, and as soon as it touches that red, it tends to consolidate, and it tends to consolidate. And when the technicals are really heavily extended, but the base and the cross are not, that's how you know it's not done yet. And so we need to look at other things like X meter to try to time our entry. And then, I waited for, on this particular trade last week, I waited for X meter to tell me that, okay, this pair now is overextended. And so this is just another tool that we can use. I wouldn't use this all by itself. You probably could and you would do okay, but you would do much better to still use all of the tools that you've been using. And this tells us that we have a nice reversal. The reason that I shorted the Aussie yen tonight is, if we zoom way out, let's go to an 8-hour chart. You can see it's been doing kind of what the pound dollar's been doing. It's been making these huge runs to the downside with these short-term consolidations, and then it should form another consolidation to the downside. What I've noticed, and this has been a trend for the last couple months, is at the end of the months, the yen pairs in particular start to lose strength. The yen starts to gain in value, and the reason for that is the BOJ, I think every month they renew their, basically it's quantitative easing, but they chose a different term for it, but they stop buying dollars towards the end of the month, probably because they run out of their budget. And then so what we'll see the yen strengthen probably for the next few days, and then at the beginning of June, we'll start to see the yen pairs go north again. And so for right now, I'm trying to catch one of these consolidations to the downside. Now another tool, if you look at the base and the cross, when these two numbers get, and I'm looking for an example, here's one that's pretty good. You see the CAD yen, the base on this is short and the cross on this is long. So the divergence between these two currencies, remember, not a currency pair, but each currency pair is made up of two currencies. The divergence between these two currencies is fairly extreme. One's trying to go short while the other's trying to go long, and that does form a trend, but they have to, for that trend to sustain itself, they need to be closer together in value. So in other words, right now, remember the cross value is inverted, and it just makes it easier. So actually this means that the yen is weak, but because we inverted this value to make it more intuitive, this means that because it's weak, it's going to send the CAD yen long. And so these values are actually pretty far apart. There's a tool I'm going to release in beta, and it basically breaks down all of the different currency pairs, and it shows the divergence, the value or the difference between those two values, the base and the cross. And you can see right now the CAD yen is pretty high, not overextended. I'll post a link on the forum for this, and eventually we'll add it to our official tool set. Anything within 5.0 is normal. It's what the market normally does. The divergence is fairly healthy. It's okay. It will consolidate. But when we start pushing up into these yellow levels, then the market has to consolidate. It has to do something, because then you have an arbitrage situation where one side of the currency pair is a lot more overextended, or the deviation is too great for the currency pair and it can't maintain that for very long. That's a beautiful thing about trading currencies. It's not like equities. Currencies can't sustain long-term trends indefinitely. It just won't happen. And so I created this. Again, it was something that I wanted and I needed, because on the fly, it's really hard to just eyeball all of these and quickly pick out, okay, there's a high divergence, and no, that's okay. And so now you can just flip to this, and I spend a lot of time just watching this. And usually what I do is if I see a high divergence like this, then I'll flip over to 4Xlounge Live or open up the trend chart. Like for example, here's we were looking, go back. We were looking at the CAD yen, and then I'll probably open up, probably asking, why do you keep opening up the 15-minute? That's just the one that I like to look at. You'll find one that you prefer to look at. I prefer the 15-minute view for I go from 15-minute out to like 8 hours. Those are the two that I spend most of my time on. And you can see these two lines are separated. And you can see most of the time, these two lines will just be entangled. They just kind of go back and forth across each other. That's healthy. That's the market doing what it's supposed to be doing. When we see a separation between these lines, there's an arbitrage situation. One of these currencies is doing something that's not supposed to be doing, meaning it's tugging against the other one. So here's sort of an advanced way to look at how to use this tool. And this is the last thing I'll show you guys, so I don't want to pound you with too much information. We'll stick with the CAD yen. I'm going to go to a 1 hour chart because that seems to be where I get the cleanest view for this. I try to figure out which currency, remember base and the cross, we've got the CAD and the yen here, which currency is following the technicals. So is it the yen or is it the CAD? For this one it's pretty obvious, right? I think the yen in this case is following the technicals a lot closer than the CAD. So the yen, I consider the yen the on currency and the CAD the off currency right now. It won't always be that way. They'll vacillate back and forth. They'll change roles. But right now, so I want to look at what's the CAD doing. Well, the CAD is trying to go short. Even though the pair is going long right now, the pair will eventually follow the off currency. And you'll notice this as you're using this tool and watching it. And so what we should see over the next couple of hours is the CAD yen will start to slowly grind to the downside because it's going to follow this off currency. Hopefully that makes sense. I know this seems like a very complicated tool. It's really not. Just try to give yourself a chance to get your head around the idea of sort of macro or global data versus time frame data. We've been trained in Forex traders to look at 1 hour and 5-minute charts and to get pegged to time. Time really doesn't matter here because we're looking at aggregate values. We're just zooming in and out on the data. So hopefully that makes sense. If you have any other questions, post them on the forum, and I'd be happy to answer them for you. Thanks.